Hi traders, welcome to this live currency strength indicator table video with me, John, on this Monday, the 10th of July. Over the weekend, Pound Aussie has remained on our currency strength indicator tables, so we're going to be sticking with Pound Aussie as our focus pair going into this trading session. I want to see how this market performs, especially because we have a lot of volatility potentially in this market. There's a lot of speeches from the Bank of England governor coming up, so we could see a little bit more pound upside if we get the the move in our favor. Obviously, day traders is showing pound as S3, so not the strongest of the currencies at the moment, but we still have that correlation there, and I think it's still a good currency pair to look at. We're also going to take a look at pound CAD. That's a nice currency pair too, as well as CAD Swiss, Aussie Swiss. So let's dive straight into pound Aussie now. On Friday, we were looking at this as our main focus pair because price has traded through the 1.9150 handle. We were talking about if price was going to continue to the upside to the sort of next level of resistance highs, that could bring price all the way up to the 2.0600 area. Now, if that's the case, that would have been a move over 1,450 pips. Now, we did talk about a bit of a level between that was around about the 1.97, and the reason we talked about that was because we have this long-term trend line coming through and it kind of intersects around about that 1.97 level. So in theory, that is about 500 plus pips away, and that could be the sort of area that the market wants to consider as targets in this kind of bullish move that we're seeing price in at the moment. So happy to look for further upside. We did place an order last week that didn't get triggered. We were looking for a bit of a deeper retracement at the 1.9 area. If you did, however, go for the 1.9150 entry, you would have been triggered into that move and you'd be about 145 pips to the upside. So if you did happen to jump in on price action there, that could have been something you looked at. Now I'm looking for a different opportunity. I can see that prices kind of formed like an area of lows here, as well as kind of intersection with that high. So I've actually gone for an order at the 91.80 handle. We've got 150 pip stop to work with, so I ended up just pushing that down a little bit further just to get below these lows here, because we're still targeting nearly 500 pips away. You know, a 200 pip stop is still a decent potential stop to have. Let me just bring on my risk reward tool. So let's say I entered around about that 1.91 area, 91.80, and had a 200 pip stop loss. You can still see 197 would still interact just below the 1-to-3 risk reward ratio, so still a very healthy risk to reward. So looking to see if price can pull back down, trigger us in, and then continue to trade up to that level of interest. The next chart is pound CAD. Pound CAD, again, another market I'm really interested in. We can see that we've broken out of this consolidation pattern on a daily chart. Very clean price action. If we were to see a continuation up to the next level of resistance is the 1.3 handle. If I zoom out for you, the 1.3 handle has been formed from these highs back in 2022 in February highs, as well as the highs in December 2021. So those are the levels I'm looking for. Just looking again, can we get some kind of pullback into this market? Now there's kind of two areas I'm interested in. There's sort of a long-term area of interest, which if I go to the 4-hour time frame, you can see, which is around about the 169.50. If we were to go in long here with 100, just over 105 pips, about 110 pip stop, we could be at 168.38 as an option. And again, from a risk reward point of view, that is a decent opportunity. So like I said, if we were in at the 169.50, let's say we had 110 pip stop loss, then you've got a really good healthy risk to reward ratio on this one. The only thing is we may not get that pullback, so you've got to consider what kind of pullback could we get going into this session. If I look at the hourly chart, we can see that price has started to find some support in and around this 1.7 handle. So I've also considered an entry at 171.10, which is just in and around here. 105 pips on the stop loss is in a little bit of danger with the 169 here. However, we still have the 169.50 as a broken support. So I think if we break through 169.50, we probably will trade a little bit lower there. But if we extend it down a little bit, you could probably even go to the 135 mark. And that still gives you the 1 to 2 risk reward ratio. It brings you below the 169, which will then give the market that kind of space to sort of move and be able to, yeah, basically breathe. Sorry. My words got stumbled then because the dog started flapping his ears in the background, so apologies if you did hear that. But we're going to see what markets we want to take a look at next. So we've got Aussie Swiss on here. We've got CAD Swiss on here. CAD Swiss, really interesting market to take a look at the moment as well. So if we just kind of have a look at CAD Swiss, the reason why I was interested in this market is because we've kind of traded down into a key level of support. And it looks like if it breaks, we've got another big level to work with. So if I actually go to the 4-hour time frame, you can see price consolidating under the 0 spot 67 handle. The next level of support then is the 66.25, and that is around about 60-70 pips away. Now, ATR is saying we need at least a 44 pip stop loss. However, I was looking to see how we could increase our risk reward ratio on this one. And one thing we could potentially do is look for a re-entry around the previous highs. So in and around this high in here, for instance. So we could also consider an entry short on CAD Swiss. Entry in at these previous highs that price has been into. It says a 44 pip stop loss, but if we were to round that, let's say to 40, then we've got a 1 to 2 risk reward ratio then, because we've got like a 90 pip target with a 45 pip stop loss. So there's something to also consider going in there. The only thing is this one may not get triggered because price is held at the 50 at the moment. It's breaking back below. So if we don't get the entry here, what we may need to consider is the fact that price is in this kind of consolidation. It could break down, retest and continue lower. In that case, we may have to look for a retest entry if price was to continue to break down here. The final one I did want to take a quick look at was Aussie Swiss. Aussie Swiss, an interesting market as well. The only thing with this one is we are at a major level of support. So you can see we're at the 0 spot 59 handle at the moment. So if we were to take any kind of opportunity here, I think it's going to be more on the short-term side of things. And in fact, if we have a look at the hourly, we can see we're extended away from the 50 moving average. We are at the 59 handle. So if I was going to get any kind of entry on this, I'd want to be in around about the 59 sort of 50s, 59 40s, because that brings us back into that resistance zone. With a 52 pip stop loss, I'll get a good sort of area where I can place my stop loss. The only problem is 0 spot 59 is the early target, and you'd have to stretch your targets a little bit beyond that if you did want to kind of max the risk to reward ratio here, maybe down at the 58.95. So at least you've got an 80 pip target, 50 pip stop. You've still got a okay risk reward ratio, but not the best. But I thought it was worth a mention if you are going to take a look at the markets today. I think my favorite one is definitely going to be Pound Aussie. Pound Aussie, definitely the market more of interest here. It features at the top of our trend traders, features on the day traders as well. So thanks for watching the video, and I look forward to speaking to you in the next one.